everyone, Paul here. Today I'm going to be looking at another stock. We're going to be looking at we're going to look at it with the mindset of if you want to do dividend investing with it, like on a compounding mindset. Like if you were to invest in this company, would it be profitable through dividend investing? And that's, buying the stock and then reinvesting your money with it. And we're going to look at that on a dividend investing mindset. We're going to look at it on an option trading mindset to see if it's valuable. If you trade it, now I'm going to show you the formula that I use to do my trades. You guys do not have to use this exact formula, but it's the formula that I use when I do options, and I use it for a lot of my trades, and it works really well. So we're going to look at it from both perspectives. But anyway, the stock I'm picking today is Starbucks. And Starbucks itself is a company that is not probably going to be going away anytime soon. So as a company, you know that it's going to probably be here in about 10 years from now. So it's, as a company, a good choice to have, but is it worthy of investing with the stock? Let's find that out right now. Okay, so right now the Starbucks stock is about $99.06 per share. It's up a little bit today, so that's good. So let's look at what you get in dividends. It's 99.98, somewhere around there. So is it easy to accumulate? Let's just see here. It looks, it's a quarterly here. We got, now compared to the stock I looked at yesterday, I think Starbucks has a little bit better, because I think yesterday I did Waste Management. And as far as dividends go, you get paid here, so you get 25811. So yeah, it's quarterly. So basically, for every $100 pretty much, you'll make 53 cents every 4 months. That may not seem like a lot, and what I could probably, now what I do when I do dividend investing is I focus first on the ones that pay monthly, and then later on, after this is just my personal strategy, okay? I focus on the ones that pay monthly, and the next couple days I think I'll go over the ones that I do that are monthly. But this Starbucks, in my opinion, I would tackle on to Starbucks after I have a little bit of monthly dividends coming in from your dividend payout. From your dividend payout, to put that in later on with some quarterly companies. And Starbucks seems to be a good one to have, but you'll get your 53 cents in like 4 months. So what I would do is actually build it up monthly, and then later I'd add Starbucks as like a fourth or fifth a dividend investment. But it's a good one to have, because you basically let's just do that math here real quick. It's not going to be a lot, but you're making 53 cents, and you want to divide that by 4. You're basically making 13 cents a month. You're basically making 13 cents a month, but you won't get paid. You won't get paid until 4 months. So you got to keep that in mind. It's not a monthly dividend payout. So let's look at the options trading side of it and see if it's. Now, if you're not familiar with my formula, let me run that bit by you real quick. I go to my indicators, and I go and I punch in 3 smooth moving averages. I go to my 3 smooth moving averages, and you want to check the first 2, and then you want to do 5 and 8. And the strategy is pretty simple. And you also have to have the RSI. RSI is very important in this strategy. What I do is I do it on the hour, And what I like looking for is in the RSI, I look for moments where the RSI crosses up. The moving averages are only meant to show you the overall direction of where it's going. It is not meant to do trades on the moving average, because you see it crossing right here. You can make your move, but I base it off of what the RSI is. So it has to match what the RSI is doing. So what I'm going to be doing is I'm going to be drawing a line everywhere the RSI crosses. It's right here. There's a spot right here. Do a couple of them. There's a spot right here. Right there. And we got another one right here. Right about here. And let's see, we got one up here. So then basically you go through and draw lines. You guys can do this yourself. Just go back and draw a line everywhere where the RSI crosses. Got one right here. And let's do two more. Right about here. And then one more. Let's do one more. You got one right here. Okay, so let's go back and look at what the price difference is, and we'll see if it's profitable. Okay, so first we got this one right here. See the RSI. Now, in order for you to do a trade, the direction of the RSI has to match the direction of the moving averages. Do not go against the trend, and you do not do this strategy if the moving averages are doing the opposite of what the RSI is doing. So let's just go right here, and we see that the direction is going up. It's going up, but it's kind of going up at a little bit late, but let's just check this one anyway. Let's see how much of a price difference this is. We go up here, we see a $1, $1.29 difference in price. So let's check Robinhood here. So personally, I would always do about the second one down, because you want to get in at the best time for the stock. So let's just see. We got in at, we had a 129 in about 2 days. A price difference of 129. So basically that's 107 something in there. Let's just do 170 somewhere in there. Okay, so that one was about $116 move. So that one was a 2-day move, and you made a little over $100 in 2 days. Now this one right here is a short one. But we'll see what it does, because we see the RSI is going down, and we see the moving averages are down. So it's a good one, but it's very, very brief. Let's check it out from here to here. This one was just $1 difference in price, pretty much. So this one was, that's 99, let's do 100. I think we might have already done this one. Anyway, this was anywhere from 47 to 100 to, no, what was that? Price difference. Okay, we'll do 155. 155. Okay, we're looking at about $96. That small move was about $96. Because let's look at this next one. Okay, so this is an example of a bad trade right here. The RSI is going up, but the moving averages are going down. So this is a bad trade. I would not do this trade. Okay, we got one right up here. We see the RSI is going down and the moving averages are going down. So this is a good trade. You get in right here. You ride it out till here. This one is good. This one is a $4.24 difference in price in 2 days. So let's look that one up. We got $99.55. Let's just do $4. 99. We're looking for 103. Looking for about 103. This one doesn't even register. So let's just say that was a little bit, even $2 less of that, and you're looking about $193. And that's, you didn't even have to take this full trade, and it was $193. Okay, let's look again. We see a brief moment of it going up right here. This was very brief. So yeah, they were looking at about, this is not even $1 difference. Probably not even worth it. And you know, if you're looking at the RSI here, you're seeing that most likely the direction is still down. And you can easily catch these kind of small little pumps. So that was just a small little pump right there. Might have been easy to catch. Okay, this one is a bad trade because the RSI is going down, but the moving averages are going up. And then you got this big one right here. You see the RSI is going up. So if you come in right here and ride this whole thing out, it's another $4 difference in price. I'm not going because I'm not going to check this one because it's not registering because it's too much for it. But you can do your own numbers. But this is probably, I'm guessing maybe $150 to $200, somewhere around there. Let's look, and okay, so that was the last one. So anyway, I've got kind of mixed feelings about trading with Starbucks because, you know, it does give some good gains, but from looking at the charts, the Starbucks, it just seems kind of like it doesn't really have that much of volume, in my opinion. There's a lot of days where it's like small pumps and back down. And for an option trading standpoint view, I look into those that have a lot more volume with it. And we've seen that with McDonald's and some of the other stocks that I've covered on here. So like I said, I think this is more of a stock to be a dividend investor in. And I think there's better choices to have when it comes to doing options trading. Not to say that Starbucks is a bad company. It's just my opinion. It doesn't have as much volume to it to do options trading with. There are other companies out there that give you better results when it comes to doing it with options trading. But Starbucks is a good company to invest in if you're doing dividend investing, and that's just my opinion. So anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button, and I'll see you guys in future videos.